Hey everyone, and welcome back to another video for today. So Nebius on Thursday was up 17.5%. After hours, we are down 3.5%, have a market cap of around $9.5 billion. So what exactly has gone on with Nebius on Thursday? Is there any company specific news? Did Wall Street suddenly notice that Nebius might actually be worth quite a lot of money? Is this purely because of CoreWeave? CoreWeave has been going up and up and up more recently. It's up over 250% or so in the past couple of weeks. And so maybe the market is like, oh, if CoreWeave is worth X amount, then maybe Nebius should be worth closer to what CoreWeave is worth, although revenue-wise, it's still quite different, right? CoreWeave is generating way more revenue than Nebius at the moment. So what is going on with Nebius right now? And I know a lot of your attention is probably on what the heck is going on X at the moment with the posts, with the tweets on Truth Social between Elon Musk and Donald Trump. Tesla stock was down 15% or so on the day. So Nebius up 17, Tesla down 15 or so, probably down even more after hours. So yeah, maybe that's going to be a topic for another video because I really want to just focus here on Nebius. So if you enjoy this type of videos, hit all the buttons, especially the subscribe one. Really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so first up, I know this didn't happen on June 5th, but this was announced on June 2nd, and the stock did drop around 7% or so on that day after this came out. So Nebius Group announces private placement of $1 billion in aggregate principal amount of convertible notes. So they announced that it has entered into definitive agreements for a private placement of senior unsecured convertible notes in an aggregate principal amount of $1 billion in two tranches. $500 million aggregate principal amount of 2% convertible notes due 2029 and $500 million aggregate principal amount of 3% convertible notes due 2031. The CEO said the following. Oh, and by the way, the conversion price was approximately $51.45, which was at that time around 40% premium of the actual stock price. Pretty impressive. Of course, now we're much closer to that $51. So, comment here from the CEO. We are pleased to have successfully raised $1 billion in convertible notes, which marks another major milestone and underscores the deep conviction of the investment community in our business. Since our $700 million equity financing in December 2024, we have been scaling rapidly and expanding our global AI infrastructure footprint. The fresh capital we are raising now gives us more firepower to go faster, paving the way for increased revenue opportunities in 2026 and further accelerating us towards our medium-term target of mid-single-digit billions of dollars in revenue as a high-margin business with potential upside. Now, I just want to point out something for those that didn't see this coming. First of all, you should have seen this coming because I've talked about this before, but this comes from their shareholder letter, which was released, a couple of weeks or so ago, 2 weeks, 2.5 weeks ago. As we have minimal debt, we will be opportunistic in tapping capital markets for more traditional types of financing, while seeking to minimize dilution to our shareholders and to be prudent with respect to any future debt load. Given our mid-term growth prospects, fueled by our lower cost of capital funding opportunities and coupled with our relatively stable cost structure, we see a clear path to building a high-growth business with a strong margin profile that can generate solid, sustainable free cash flows. The opportunity ahead of us is immense, and we have the technology, talent, and funding flexibility to successfully capture it. So, came at no surprise that they're doing it when the stock was high. Well, now it's higher, but as I said, the conversion price was even higher than that. The CEO also said it in a podcast with Axel, one of the early investors when they did that $700 million equity financing back in December. So I was not surprised at all. Now you might say, did you buy more shares? Unfortunately for me, the timing of this could not have been worse because I was not near a PC throughout that day, so I did not take advantage of that dip. And to answer the other question, yes, if we go back in the low 30s, maybe even below 30s. I don't know if that's a possibility anymore, but you never know. I will definitely be buying more shares. I am increasing my cash position, so I'll be ready for any big pullback. Continuing here, and I'll remove myself, building foundational AI infrastructure is a capital-intensive business. In addition to access to the capital markets, we are fortunate to have non-core assets and equity stakes with significant growth profiles that can be used to support the future funding requirements of our core business. We'll talk about that in a second. Our strong balance sheet and low interest burden will allow revenue growth to translate efficiently into bottom line results and be reinvested into our core business. These are important competitive differentiators for us, as it should enable us to deploy billions of additional capital to support our plans for hypergrowth while remaining disciplined on leverage and minimizing shareholder dilution. We are grateful for the continued support of our investors who understand the scale of what we're building and the substantial market opportunity we can capture. The company intends to use the net proceeds of the issuance of the notes to finance the continuing growth of its business, including the acquisition of additional compute power, the expansion of its data center footprint, and for general corporate purposes. Then we've got a very positive analyst note that came out. Might not be the most followed analyst out there. So the firm, the analyst, is called Aret. I don't know if I pronounce it correctly, but they initiated with a buy rating and set a price target of $84. So when that was announced, of course, $84 means more than a doubling of the price we were at back then. So valuation setup. Core AI infrastructure business implied at only $2 to $3 billion enterprise value, 1.7 times EV to sales in 2026, estimated numbers, viewed as long absolute implied valuation relative to opportunity. As for the monetization potential, AV-Right and or the 28% ClickHouse stake may be monetized per management, as we've just read before. Right? They own 100% of AV-Right and they own 28% of ClickHouse. And ClickHouse wants to raise money, and I believe the valuation there was close to $6 billion. So that's one of the ways for Nebius to work. And AV-Right, I would not be surprised if they start raising money for that part of the business. We'll talk about AV-Right later in this video, but this one could also be valued at a couple of $1 billion, right? And since Nebius as a whole is worth, let's say, even if it's worth $10 billion, if you start adding AV-Right, if you start adding ClickHouse, Toloka, Triple 10, and then the core Nebius business, you will probably reach, well, above $10 billion in market value. Then AI and AV exposure. So positioned for frontier labs business, which could transform estimates. Exposure to autonomous vehicles and AI native firms, as we just discussed. So potential monetization of the ClickHouse and AV-Right businesses, winning frontier labs business, re-rating of undervalued AI infrastructure operations, which is basically the core business, which is 2/3 of Nebius revenue right now. And so analyst sentiment is, of course, strongly positive, compelling upside driven by strategic stakes, AI infrastructure discount, and growth optionality. The analyst comment here said the following: Nebius core AI infrastructure business implied that only $2 to $3 billion enterprise value within market cap. We've just seen the multipliers there. AV-Right and or 28% of ClickHouse stake may be monetized according to public statements by management, and they're aiming to win frontier labs business could transform estimates in their view, like the setup of low absolute implied valuation for AI infrastructure and exposure to AVs and plans to realize stakes. Could not agree more. Now you might say, okay, if they think it's worth $84, probably in the next 12 months, then why should you care about buying the stock right now in the 40s? Why are you waiting until you can buy maybe in the low 30s? Well, I have the luxury of having a very, very low cost basis right now compared to where the price is at right now. So I'm in no rush to start buying. Of course, I could be buying. I could start buying already in the low 40s if I want to. And yeah, if I had an even bigger cash position, I probably would, which is why I will be buying just in the low 30s, maybe even mid 30s, depending on the market situation. All right, now let's talk a little bit about AV-Right. Again, part of Nebius, they own it 100%, right? It's not like ClickHouse, 28%. No, Nebius, they own it 100%. I do expect them to raise money to fund this business, and maybe they might not own 100% anymore, but at least we'll know how much that business is worth. Now, we also know that they plan to have 100 robotaxis operational by the end of the year. They also have partnerships with, I believe, Grubhub, Uber, and a couple of others out there. They also will launch in Austin, and of course that would mean that they will compete with Waymo and maybe Tesla, because we're in June, right? Remember, robotaxis in Austin should be launched in June, and so should the new and more affordable models. But now with everything that's going on, remains to be seen what happens. But here again, this is a part of the business that I think could be worth billions of dollars in the future, if not more. And that's what I'm getting already just by buying Nebius today. So again, undervalued, I'd say underappreciated, right? This is Nebius. So you have Nebius, the core business. Then you've got Toloka, you've got Triple 10, AV Ride, and then 28% of ClickHouse. And that's the thing here. I know we've been talking about CoreWeave, Nebius. Yes, CoreWeave has gone up quite significantly over the last month or so, right? It has crushed the market and has crushed Nebius as well. But CoreWeave has also, I won't say advantage, but it was a big popular IPO this year, although when they actually went public, it was at a lower price than what they were expecting. And so the stock at first was struggling, but then you also had this whole tariff story still going around. But yes, since then, since the last earnings report, since that OpenAI announcement, the stock has gone up quite significantly, but they're definitely benefiting from the fact that they did IPO, right? Nebius did not IPO. They just were relisted on the NASDAQ at the end of 2024. And that's why I still believe it is flying under the radar. There are still not that many analysts covering this company. But I do think that the more and more this company executes and performs well, they will become more and more popular. Now, me as an investor, I don't need a stock to become popular in order for it to make sense. I would like Nebius to stay under the radar for a long period of time. I couldn't care less. I would like to accumulate as many shares as possible at the lowest price as possible. The only thing I want to see is the business executing. And as they've told us in the last shareholder letter, Nebius Group has had a very strong start of the year. Our core infrastructure business delivered annualized run rate revenue as of the end of Q1 of $249 million. That was up 684% year over year. We are continuing to see strong dynamics in Q2 with April ARR of approximately $310 million and have maintained this strong momentum into May. This demonstrates the strength of our business model and our ability to scale up rapidly. We are rapidly expanding our capacity footprint. In just 3 quarters, we've gone from 1 location in Finland to 5 locations across Europe, the US, and now the Middle East. We are actively exploring new sites in the United States and around the world, and we expect to provide more news on this soon. Expect actually more announcements next week. Next week, there is GTC in Paris, VivaTech conference, and Nebius is going to be there as well. Nvidia and Jensen are touring, let's say, Europe. So I do expect to hear a lot more about Nebius over the next couple of days and weeks. So don't be surprised if we suddenly hear new deals coming out. They also told us that they're still on track to achieve $750 to $1 billion in annualized run rate revenue by the end of this year. And they do expect that in the second half of the year, Nebius Group is going to turn adjusted EBITDA positive. And don't forget that this ARR number was previously between 500 million to $1 billion. Now it's between 750 to $1 billion. I think it will come closer to $900 million to $1 billion at the end of the year. So yeah, all in all, I guess you have, the analyst coverage, bullish sentiment, some momentum with CoreWeave that definitely affected Nebius positively. I do believe that even CoreWeave today was down a little bit, taking a breather. And yeah, you've got here a great business that maybe finally is getting the respect that it deserves. And so that's about it. No, I have no plans on trimming my position anytime soon. I actually really want to grow this position to be much, much bigger in my portfolio because I am very bullish on this company and on the management, on the roadmap, on the vision. So yes, this will become bigger and bigger in my portfolio. So that's about it. Do share your thoughts down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye bye.